This week is going to be a busy one. We have the MPC coming up. First and foremost, what's your take on the market performance last week? I mean, we saw a lot of profit taking. We thought the market wouldn't cross that 25,000 mark, but that's what we saw.
I think it's quite positive. I feel that, I mean, at the beginning of the year, I'm probably one of the more pessimistic people about the direction for the market. We've seen very good numbers. Especially today, we're seeing numbers very good across sectors. Breweries are doing very well. The banks are also doing well. The food and beverage numbers are quite good. And that has sort of put some gas behind the momentum around the market. Obviously, my concern with the market has always been the fact that we will always see selling into rallies. So when you see significant, gains in the market, the tendencies for portfolio managers to take profits just because of the level of volatility we've seen in the market recently. Now, I think that what is key going forward will be some of the moves that the central bank makes next. The MPC this week is quite important. We've seen inflation numbers that have trended significantly downwards, almost 0.5, 0.6% lower than July numbers. That is positive. However, I think that the central bank will want to see that its tightening has actually had a more significant impact than before they start to make moves around the either the NPR or the reserve ratios for the banks. But all in all, I think that we're seeing some positive sentiments driving the market. A lot of that positive sentiment is driven by the good numbers that we're seeing from across the board, and that could provide some flip for the market going forward.
Yeah, but going forward, I mean, we have the market making a program starting tomorrow. I think that will boost confidence on the market, investor confidence during the course of the day. What's your take?
I think that the market makers is somewhat overrated. Especially in the early stages of even people trying to understand what the roles of these guys are. I think that when you will start to see the impact of the market makers would be when there's better understanding across the sector how it works, the actual roles of the market makers. They're not in business of losing money. I think everyone else needs to realize that. And they've got to actually get those volumes first before they can make a market in the stocks. So I think that the impact will be muted in the first couple of trading days. But over time, you would see it's going to result in a seismic change in the way the market runs, because then you don't have the problem that you have today, where you can get stock just because there's no one selling. But the key challenge for me still remains the 5% limit. You've got market makers, then you've got a 5% limit. It just doesn't make sense. You've got to remove the 5% limit. That gives the market makers enough bandwidth and enough room for them to be able to maneuver with pricing and with volumes. And then you would start to see the long-term impact of that.
Well, there was some discussion. The NSE did hold a sort of workshop last week trying to educate investors on this market makers program. And there was some talk of the fact that these market makers may have too much power. They don't have that much regulation. What are your thoughts on that and the amount of power they're going to have in the market?
Look, Uche, at the end of the day, it's a market. And what you're going to always have in a market is some players will dominate and some players will shape the rule setting around the market. Now, if the market makers end up doing that, I think that that's a natural position for them to be in, simply because of their size and how much of the market that they will control ultimately. But the key issue is the market at the end of the day still determines who's successful or not. And the success of the market makers will be determined by how efficient they are in anticipating the market and being able to position themselves properly, and as well as the market also just being the market, which means that no one player is likely to be able to control the direction of the market in the long term. You may be able to do it in the short term, but in the long term, the market would always find an equilibrium. And I think that that's the bigger comfort around the market makers. I believe that the new NSC that we have, or the current NSC we have, will be able to navigate around the difficult terrain of market making and whatever is required. But I think that the attention of the market now should be moving more towards removing the restrictions around price determination. Then market making becomes more interesting.
Now, another topic coming up this week. I mean, last week we saw the U.S. Fed go for another round of quantitative easing, what they're calling QE3. there's talk about how that's going to impact our market, and they say, I mean, it's going to, open up some liquidity over there, and that's going to benefit our market here in Nigeria more. What are your thoughts on
Well,
this?
first things first, depending on what side of the divide you sit in, it looked quite interesting that the job numbers came out, the week before, and it wasn't very good, and this happened. So you're almost asking yourself, is the Fed working with the current government
That's
in the
right.
US and to ensure that Obama wins the elections? But the key issue for us is if there is improved liquidity in the market and the Nigerian market still continues to provide a compelling case for investors, you're going to see quite a bit of flows. Let's not get it wrong. Europe right now is everyone's, no one wants to go to Europe. When you have capital, everyone is piling capital out of Europe. And the natural beneficiaries of that will be emerging markets, of which Nigeria, starting to feature around the frontier side of things. So I think that could be ultimately positive for Nigeria, especially if portfolio managers are still convinced that Nigeria provides long-term value for their investments. So I would say it will be a bit muted, the direct impact on the market. But I think that what will drive the Nigerian market is the next set of moves that the central bank makes and the sort of numbers that we see from the big players.
Now you're talking about the next set of moves we see from the central bank. MPC coming out tomorrow. Last time, they kept the rates on hold, but they did surprise everyone with the CRR, raising the CRR, of course, in that tightened liquidity in the system. Any surprises? Are you expecting any surprises this time, or just the keeping rates on hold?
I hope for all our sake that the central bank actually can slow down a bit. There's a lot that has been done in the economy in the last 2 years. The MPR has doubled over a 2-3 year period. CRRs have moved from 2% to 12%. So the reality is that there needs to be a slowdown and see the impact of all of these moves on the market before we see any aggressive movements from the central bank. My take is that we're going to see the central bank come out with less hawkish statements at the end of the MPC and start to show some confidence around the inflation numbers that are starting to trend downwards. The currency is stabilizing at a bit. I don't think it's a time for them to do anything dramatic.
And certainly their forecasts for inflation were wrong. Inflation has continued to trend downwards.
Yeah.
We expected it to hit 14%, 14.5%.
Well, I think that one of the key things that everyone must accept is that disposable income has dropped significantly in Nigeria. And the propensity for people to just spend, given the level of uncertainty around the economy, has reduced dramatically, and that's definitely showing up in the inflation numbers.
Okay, well, thank you so much for joining us today. Femi Oladehin, Senior VP with Argentil Capital.